Hello, my name's Richard Martin and I'm Head of Corporate Reporting at ACCA. I'm joined by my colleague Paul Cooper, Corporate Reporting Manager at ACCA, and we're here to discuss an important development at the ISB, which is their new exposure draft on lease accounting. Now I think this could affect nearly all businesses that prepare accounts, so pretty important. Paul.
Hello.
Hi. Where have we got to with the lease project?
Well, we've come quite a long way already. Starting in 2009, there was a discussion paper looking to amend the existing standard IAS 17, and that was followed the following year by a first exposure draft. Based on the responses to that 2010 exposure draft, the IASB has issued a further exposure draft, and the comment period for that has just ended.
So, Paul, now, you mentioned IAS 17. Why do we need a change there? Because is it working okay, isn't it, or is it not?
There have been a number of criticisms of IAS 17, and principally that too many leases were kept off the balance sheet of companies. If you think about, for example, fleets of aircraft and rolling stock for rail companies, a lot of those were accounted for as operating leases and therefore didn't give rise to liabilities in the balance sheet of the lessee.
Right.
In addition, the disclosures for operating leases are fairly meagre, and additional information has been considered necessary by users of the financial statements. Indeed, some users of the financial statements have actually gone so far as to do some fairly crude adjustments which have aimed to take these leases onto the balance sheet and thereby get a better understanding of a company's true indebtedness. The other thing, finally, with regard to IAS 17 is the issue of possible manipulation. Is it possible to manipulate the terms of a lease in order to make it an operating lease and therefore keep it off the balance sheet? And a number of lessors and lessees have been able to do that.
Yeah, so is this going to be just affect members who prepare or audit IFRS accounts?
At the moment, we're looking at a new IFRS, so it will affect preparers who use full IFRS. Now, when it comes to jurisdictions which endorse IFRS, such as the EU, then I think the standard will be endorsed with few changes. In the United States, companies which adopt FASB's accounting standards will have a similar standard to the one proposed by the ISB, which they will be adopting. For the IFRS for SMEs, which is not adopted by many jurisdictions yet, the new leasing standard will be incorporated into that at some later stage when the IFRS for SMEs is amended. Similarly for national GAAP, that will have to be amended at some stage by the national standard setters in order to incorporate this new standard. And that might be some years ahead. For example, the Financial Reporting Council for the UK and Ireland has only just issued FRS 102, which is based on existing standards, including IAS 17. So it may be some time, perhaps as late as 2019, that this new standard will be incorporated into UK GAAP.
All right. Okay, let's just if we may to what's actually being proposed here. Should we start with lessees, so the people who are leasing the equipment or the property, the cars or whatever?
We now have what's called a right of use model, and all lessees will recognise an asset and a liability in their balance sheet, regardless of whether the lease is currently an operating lease or a finance lease. It's called a right of use model. So what they are recognising on their balance sheets is not the actual asset they're leasing, but the right to use it. The corresponding credit entry will typically be the lease liability. We now have two types of leases which are being proposed, Type A and Type B. And whether your lease is Type A or Type B depends on how much of the asset that you will consume as lessee during the period of the lease. So, for example, a piece of machinery will be more or less completely consumed during the primary period of the lease, and that will be Type A.
Right.
Type B is the opposite, and perhaps not unsurprisingly, many property leases, say a 10-year lease of a building that will last, say, 150 years, will be Type B. However, not all cases will be as clear-cut, and in that respect, there will be some judgment required.
Right, yeah, okay, as we have currently to some extent. Right, Then, so that's the lessors, the people who are renting the equipment or renting the property, as we said, type A, type B. What about the lessors? Because quite a few companies are actually the owners of these things and are renting them out for longer or shorter periods. What have they got to do?
If it's a type A lease, then the accounting by the lessor takes account of the fact that the lessee will consume most of the benefits of the asset during the lease term. Consequently, a lessor will actually de-recognise its asset. It will recognise a gain or loss on disposal and also account for a residual asset. If you have a type B lease, then there's really actually very little change from what you currently see for operating lessors. And that's to say that the asset remains in the balance sheet, is amortised in the usual way, and the rental income is just simply credited to the profit and loss account of the lessor on a straight line basis. Otherwise, the situation is slightly more complicated. The unwinding of the lease discount, the unwinding of the lease liability rather, becomes the income of the lessor under a type A lease, and that is their interest income. For lessees, it is far more complicated than what we're used to at the moment. If you've got a type A lease, then your profit and loss account will show two charges. Firstly, the amortisation of this right of use asset, this right to use the physical asset, and that is typically done on a straight line basis. The unwinding of the lease liability and the discount on that comes in as an interest cost. If you have a type B lease, you're going to see something which looks a little bit like a current operating lease charge, but isn't. It will represent the unwinding of the discount on the lease liability, and it will be one charge which has a further element, the amortisation of the right of use asset. And that will be basically a balancing figure which will ensure that the one charge in the profit and loss account of the type B lessee is a straight line, same amount, right throughout the term of the lease. And if all that sounds terribly complicated, then there are some exceptions from the definition of the lease and therefore from this lease accounting.
Right.
For example, leases which cannot last longer than 12 months are just simply written off on a straight line basis.
Right, as they are now.
As they will be now.
Yeah.
Similarly, service contracts, which are not leases, say for very standard photocopiers and office equipment, will not be treated as leases. They will simply be treated as rental agreements or service contracts. And finally, the IASB is not including intangible assets within the scope of this standard. Instead, those will come under the new standard that will come out on revenue recognition.
Okay, so that is quite a complicated picture. Can you just sort of, in a way, sum up the main impacts then for lessees particularly?
Firstly, lessees will find that they're recognising far more assets and liabilities in their balance sheet. To go back to the example of the aircraft operator and the train operating company, they will find that the operating leases which they have at the moment become more complex to account for. There'll also be a great deal more in the way of additional disclosures. And there will also be judgments required in that middle ground as to what might be a type A or a type B lease and how much of the asset is consumed by them as lessees. Lessors, of course, will find the same as well because they will have to mirror the accounting by the lessees. Users of the financial statements will hopefully find that there is more information available to them. But overall, I would say that the right of use model in itself, with its complexities, is useful in two situations. Firstly, if you understand it, and secondly, if you think it's appropriate for your own information needs. And that's not going to cover all lessors, lessees, and indeed users of the financial statements. Right,
and that brings me to now the comment period is closed. Have these proposals been well received on the whole? Do people generally agree with them?
There's been a varying reaction, and certainly from ACCA's point of view, when we've discussed the issue with our global forum, we found that we don't actually agree with the IASB's current proposals.
Right.
We find that the right of use model is still too complex and it involves too many adjustments. Secondly, we have expressed concern that maybe the right of use model doesn't reflect economic reality, because every lease over 1 year gives rise to a right of use model. And we have a concern that not all leases may have such a significant financing element. And thirdly, the ISB has proposed throughout a right of use model ever since 2009. What we feel is that given the continuing criticism, not just from us but from other interested parties, it may well be time for the ISB not to continue with the right of use model, because it's tried for long enough to try and make it work, and it still hasn't got most of the way there.
Okay, and so if they're not, if we're saying, if ACCA is saying to the ISB and others that perhaps you should think again, what do we think would work better?
Well, yes, it's important to suggest an alternative under the
quite,
circumstances.
Yeah.
And we're still quite keen on keeping IAS 17, although we acknowledge that it does need to be improved. Firstly, there do need to be more disclosures, especially with regard to operating leases. We acknowledge that the disclosures there have been inadequate to date. ACCA does support keeping disclosure to a minimum, but where we increase disclosures, we regard that as valid if it's done for a particular purpose, whilst at the same time attacking those unnecessary and even immaterial disclosures which have been the subject of much debate. Secondly, IAS 17 has a finance versus operating lease threshold, and we certainly think that the bar may be set too high at the moment there, particularly when you get such major assets like fleets of aircraft, which are kept off the balance sheet. Maybe if you reduce the threshold at which a finance lease should be recognised, those assets would validly be brought onto the balance sheet and accounted for as assets of the lessee.
Yeah. Okay. So that's what we'd prefer. But how do we think things will happen from how will things happen from here?
Well, we have to see how the ISB reacts to all the feedback which it receives.
Yeah.
And it may well be that a further exposure draft is issued for comment, proposing maybe a significantly amended right of use model, or even something along the lines of our recommendation, which of course we would like.
Yeah.
Alternatively, the IASB may just push ahead with the right of use model as it is, and we will see these major changes coming through for lessors and lessees.
Yeah. Anyway, people will get some further news down the line in a few months' time, I imagine.
They will do, yes. And it's important that preparers and users of the financial statements are indeed set up to maybe mark the introduction of these new requirements, which could involve a lot more calculations, a lot more judgment around what is Type A and Type B assets, and a lot more disclosures. So they may have quite a lot of work on their hands. Yeah,
collecting information and so on. Could be about the different leases that they've got.
Yes.
Yeah. So they may need quite a bit of people may need to think about quite a bit of time to implement these proposals, I guess.
Indeed, that's why it's always a good idea to follow the progress of the proposals and what might eventually happen, and therefore we would all need to be prepared for.
Okay, thanks very much, Paul, for explaining those complicated proposals to us, and I hope you've all found that useful. If you want to find out more about the proposals or our response to them, then you can go to our website to look for more information on the link which will now be displayed. Thanks.